Fortunately, chance to have a little bit of coffee to kind of absorb what's going on here. So we have the SPOOS, the Globex 24-hour short chart that is up right in front of you. Nice movement at the end of the day yesterday, caught a lot of people off guard, and evidently caught a lot of people off guard this morning. So I don't know what the level is, but apparently there's a GEX level and we're below it, and it's a negative GEX. That created apparently, according to RT Gamma, oh, I wanted to say RT Grandma, created a bit more of a downdraft. So we are down roughly 40 points. You can see the levels right in front of you. So we've got this. Let's see, let me get my little brush here a second. So we are basically right in that area there. That's the basically the 52.87, so 84 to 87 area, where it was supportive back on Thursday, the 23rd. So that was a support area, and clearly you can see the area below that it went down to the 74, 75. So, if you're putting on a trade now, I mean, Dan was just talking that, I mean, he's looking from the long side here, but also you just got to be nimble. You just got to be aware that is there. What other correlations do you have right now? 10-year bond futures, 20-year. There is a big auction today, so people are going to be paying attention to that. So you just have to have some sort of correlations. Clearly, the trade was we got below this 52.97, 53 even. The trade there was let it trade down, it retrace, and you had a nice short for a good 10, 14 points. That was the trade on the downside. So that is that in terms of where we currently are. The I guess I would say if prior to RTH opening, if we get a bounce here, the next level is it's just going back up to the 52.97, 53 even level. It's like, does it reject that level or does it then get above and then go up to the 53.05.7 area? So those are possible. So just keep that in mind. Just keep remain flexible in your mind. Okay, let's go here. So here's the SPX chart, and this is as of the close from yesterday. We had let me increase the size of this. So this is all yesterday's action. So we had closed here on the Friday, and we kind of digested what the overnight activity was. And because we were going to have we had a 7-8 point gap up at the open yesterday. So we had noted that you don't fade the gap up. There's a good chance that it's going to go to trade this 53.10, 53.12 level. A short could be had there with definable risk, with the idea of revisiting and closing the gap down below at the 53.05, and then we had the low of 53.01 in the opening range yesterday. We proceeded in the opening range. Excuse me, this is a 15-minute chart. We proceed in the opening range to actually pop above the 53.11.12 area, and that's where we knew if it popped above and did a bit of a retrace, there was a chance we could go revisit 53.21. We didn't. It was a bit of a false breakout. The people that basically got long up in this area here, they definitely got stopped out. And we proceeded to trade down and go and fill the gap. And then we stayed in this trappy range for 8 to 12 points for, holy cow. I mean, all the way up until like noon, 1 o'clock. And a few people noted in the room, I was watching, but I was in and out frequently, and I was unable to kind of get on the short side. So I just dropped down to a 3-minute here so everybody can see. Let me show this. So finally we had that sell off, and it finally got below this 53.01 area. So we traded down. You had to retrace back up, and people that were patient had a chance to get short this 53.02, where I think Bait and Crater, I think they were able to pick up some 52.85 for 75 or 85 puts. And it sounds like those paid off handsomely for those guys. So good job, guys. And so I think that when we were down in this area here late yesterday, there were some comments that, and they were picking up 52.75 puts on the cheap. Those were because of the time of day. You just had to keep your eye on NVIDIA and ASML and a couple of the other techs that were strong, because they came back out of the gate, and we rallied from there, along with some others. So that's not a play. If you're going to take like the 52.75 puts at that time of the day with the idea that we could come down and close this gap, of which everybody was aware of in the SPX, that clearly was a play, an opportunity, but it needed to get below this 52.78 and kind of work this area. We never quite got down there. The 52.75s were cheap for a reason. So hopefully whoever participated on those, you kind of kept you already made your money on the 52.85s. Hopefully you basically just took a percentage of the profits for an opportunity for like a 5-6xer on the 52.75, but you only went in with like a couple $100 or $500 if you're already up a couple grand or whatever. And you respected the stop, because as we moved up, the 52.75s were getting cheap for a reason. I mentioned that people may want to, when we get up in this area, consider the 52.85s, because accelerating into this 93, 94 area, 95 area, you're going to get massive decay, and it would be easier to manage your risk there. So anyway, we proceeded out of the gate in the finish. I mean, we just rocked and rolled all the way up, right back into the VPOC 53.06. So relative to where ES is now, I'm going to do this, taking everything off. Let's get a clear picture again. Okay, so we're down. Here's the 52.78, and here's the wick gap at the 52.71, and the technical gap close at 52.67. Given how far down we are, these are possible. So now let's do a quick calculation. So ES is down 41 points from the close. Well, there you go. You can do the math. So basically that ends up being like, what, 52.67. What is the technical gap close I got here? Right here. That's 52.67. This is a support area. This is where we want to be. We want to be looking at the long right now here, because this is where it correlates. This is exactly SPX. If it opened right now, it's going to gap down, but at this algo support area. So I really would not be surprised if, I mean, you're getting buyer. We should be getting buyers in the S right now, right around in here, and we'll probably have a little bit of a retracement up into this 52.79, 52.80 area, 81 area in the SPX. So this would be a time with it's such a massive gap down, but it's into an algo support area. This is when it could be a reasonable risk to try along in this area, with the idea that we're possibly oversold, combined with NVIDIA and a few techs have not sold off that much. So there could be an interesting play there. Anyway, with that in mind, I will hand it over to Dan. I think he's been trading most of the morning, so he'll probably have a couple finer idea of what he'd like to do.
Morning, everybody.
Good morning.
So this morning has been a pretty good morning so far. I've taken 2 trades. So the first trade this morning was I had a long sort of in this area here. Let me go actually down to where it was. So I had a long in this area here. Yes, that. And I took this back to 95, 96. I got a scale, and then I stopped out around 91.5, I think, on my runners. Then I actually, on this retrace back up, I was able to catch this short at 96, seeing how hard, and I think I noted in the room, we got a hard rejection off of 96 the first time. We came back up, we got there again, and I took that short down to 88. So those were the two trades I've taken so far. I'm eyeing along here. Did I miss it? If we can get over 84 here, which was the bottom of this area, let me make this bigger. So the bottom of this area here, if we can get back above this and reclaim this, I think we can go back into this 89, 90, and then possibly come back to this overnight volume point of control and possibly in the 96, 97. I like this idea here. The only issue is obviously the open. We could get a little slippery at the open, or we could just missile. So it's sort of the gamble you take with those plays sort of close to the open, and you've got to size accordingly. I've already reduced my size to half size now because I've had two nice trades up 10, 12 points already this morning. So my sizing has drastically reduced now. I think that, yeah, I'm probably gonna miss this trade. Hopefully some of you guys might have taken this on the reclaim of 84. I'm not worried about missing it, but I think we could come back up in here, and 91, 90 area should be pretty, that'll be sort of the first big resistance. 88, right? 87, 87.50 is going to be the first one. And then you've got up in here, so 89, 90. And then if we really get over that, you can see 94. So let me see here. Gov got the 83. So yeah, I think that's a decent little play here to get a nice retracement before the open. A name, or I'll go over bonds real quick. So UB, you can see my chart's pretty busy here. So let's go to 4 hour. All right. So we have a 10-year, 7-year auction today. This is the ultra bond, the long bond, so longer duration, 20 plus. But you're getting into this sort of congestion area where you have these volume points of control from back in April. We're getting into that area. We're sitting at sort of a pretty decent support here. You can see here. Obviously, this must have been some sort of event, FOMC or something, so let's disregard that. But then you had a big breakout of this area here. Probably another event because you're seeing a big 4 hour candle. Then you got that sort of big move back up. And now we've retraced all the way down back here. So 120.28, sort of an area I'm going to be watching for reaction. You can see that was volume point of control back here. It's volume point of control back in here, right here. That area is a pretty important one. I wasn't around yesterday, but I saw Smooth made a really good comment, which is a sort of a comment I would have made, which is very hard for the market to go up with XLF and bonds doing what they did yesterday in here, which is selling off pretty good. So that's going to be definitely a headwind for equities here. And then you've got some volatility coming in the bond market at 1 o'clock. So that's something to watch for those trading ES, and if you're trading UB directly. Right now, I don't really have any interest in it. As we get back into this area, I don't really see an edge there. Obviously, being so oversold, there's probably a bounce coming, a significant bounce coming at some point soon, but we'll have to just see with that. Single name I was watching this morning, Chewy. Chewy is going to open up in this box here. You can see this is a daily chart. You can see the big sort of volume profile ledge here. Some people call it sort of a springboard, but that was at like 1750-ish. So we're going to open up in here in the 19 area. So what I'm liking about this is this 19 level, it was rejected here. It was rejected here. And if we can get over this 19 level, I think we now have like 2063. You have up in here almost $22, and then you have just air all the way up to $25 that you've got to fill this. You have the gap up in here. You have a small gap down here. You've got some areas here that can get up here. What I like about this is they're buying back $500 million of stock. They had a decent earnings report, good earnings report. 500 million of stock is a pretty significant amount for a company that's got a 700 billion market or 7 billion market cap and almost 20% short. So I could see this thing going on a nice trend for a couple of days. So I'm going to be, I took some equity here around 19 area this morning. I'm going to watch and see what it does. But I think this is there's an interesting prospect here as we see bonds actually sell off pretty hard right now. Let's go to yeah, so you can see what UB is doing right now. Bonds, they just broke this level here, and now they can beeline to this 120.27 area, so 7-8 ticks lower. That's going to be tough for a long here. That's going to make a long very, very difficult right now. So yeah, those are some things I'm watching this morning. I'll turn it over to Smooth.
Good morning. Let me share my screen. All right. Let me pull this back up. Okay. So on the indexes, what I'm looking at is this pattern has now completed and we are fulfilling the bearish promise of this pattern. So now I just took this low to this high and kind of looking at the Fibonacci's on the way down, we've broken this 23.6, which was 52.90 and a quarter. So that's going to act as a form of resistance. Obviously, we have our moving averages here also. Let me add this. Hold on one second. There we go. So we have a 52.63 to watch for, which is a 21-day, and then below that is the 52.42, 38 Fibonacci. I would expect us to hit that at some point in the coming days. 52.42, that'll be a pretty solid support level. So that's sort of big picture. That could happen today, the way things have been going. If NVIDIA gives it up, definitely. That's something to watch out for. Let me zoom into an hour. So it's kind of got this formation that looks a little toppy here. You know, we've had a couple of wicks reaching up here, so keep that on watch. Although the way NVIDIA has been acting, and historically these things like to kind of run into their split, which is, I think, June 10th, if I'm right. Yeah.
You are.
June 10th. So looking at it individually, I wouldn't be like saying let's shorten the crap out of NVIDIA. I mean, look at all these gaps that it has. But you know, like I said, historically these things like to keep running into their split. So it's more of a proxy for the rest of the market. Just kind of keep an eye on NVIDIA and what it's doing. It was definitely driving the bus yesterday. So which is why you know, Dan was away in the morning, and you know, I'm Mr. Technical. I don't like talking about macro stuff, so I had to yesterday. And keeping an eye on this XLF was just selling off all day. Bonds was selling off; they were just bidless all day. The 10-year was popping. VIX was starting to creep up, so there was just no ingredients there for any sustainable long.
And let me just preempt that rip yesterday afternoon, and I'll talk to Austin here directly. That rip yesterday afternoon was, we got through 52.95, which was the big gamma level on SPX. That created sort of a hedging effect that sent the market sort of missiling upwards. And because it happened so late in the day, it created such a fast reaction. So it was a mechanical move. There wasn't all of a sudden an influx of buying. It was a purely mechanical market maker driven move.
Right. And I think it was sort of NVIDIA came down to this area and then just came back up. And that's really when the market turned also. Let me go back. Yeah. And again, obviously, I know some of you followed me we were kind of in this area yesterday, and I took some SPY puts, 525s, and we're going to open, close to being in the money on those. So we took about a 300% scale down here. So, there'll be some theta burn because they were, 2 DTE. So they'll still open nicely. And we may even come further down. Some levels I've got on the pivot side that are kind of key. I have a daily pivot here at 78 and a weekly pivot here at 74, which kind of correlates to this low from last Thursday. So I'll be definitely looking at this area. This would be a good spot to sort of, sniper mode, look for a long. But again,
what was that level?
74 is the weekly.
Yeah, thank you.
And it correlates with this low here from Thursday. But again, you got to take those quick scales, and if not, you got to get out or reduce size, because with what's happening on the macro side, it's just not a good recipe for longs right now. And even on the technical side too, if we go big picture, we always have to start zoomed out. This is not a bullish pattern. This is a bearish pattern, and we're showing that this has been compromised, and we're looking like we're going to get that retrace. MACD is crossing here on the daily too, so we just got to be aware of all of that happening. We've got macro technical lining up. It's just not a good recipe for longs, so any longs have to be pretty short-lived. Take those scales and just trail the stops and get what you can and get out. I'll jump into some individuals. Tesla, been looking at, obviously, this inverted pattern has been sitting here and sort of grinding out, looking for long, and I have been long, and we scaled out up here in the 180s, 185 to 187. Now it's back down at 174, 175. If we zoom in, you can kind of see this descending triangle. That is not a bullish pattern. Typically, these will come out and continue down. Doesn't mean it will, just something to be aware of. HIMS, this is just held up really nicely overnight. We've been in and out of this scaling, but this is going $25, I think, just on the fundamental side and the technical side. It's just a nice looking chart. Crater asked me to look at CELH. They had some not so nice news yesterday. I think somebody overdosed and died. Usually not a good thing. Actually, definitely not a good thing.
No, not bullish.
Not bullish. And there
like
is
remember the Four Loko thing? I could see that being a legislation getter.
Yeah, and all of these like energy type drinks, they're all garbage. This is definitely, just continuation. I wouldn't be surprised if this comes back and tests the 200-day, around $65. It's kind of got that formation. It is a bullish formation, but this is one of those.
Crater, did you send the news of that? I want to read that, because that may be something, and it sort of sparked my mind here, is that could be a legislation getter. Like it happened with Four Loko and people dying taking that stuff, and I want to read that news, because that could be an interesting one.
Yeah, I'll have to find it. I saw it somewhere, but it was not good. You mentioned Chewy. One thing you didn't mention, it's tapping right up against the 200-day. So just be wary of that. If it gets over these volume shells, like you said, it can definitely run up. The 200 days right here at 1913. Baba is down under its 200-day now, 78.59. I know Frankie just mentioned that. So still keeping an eye on that. I haven't taken a position yet, but that's something that I've been eyeing for a long term. And Carvana has just been beautiful. This is like down at 101.40. And like I said yesterday, I've been in 112s, I think 108s or 105s and 100s. So I've just been scaling those out, and I'll scale more at open. Yeah, and like I said, just keep an eye on Nvidia. Tesla could set up a nice short if it breaks out of here. It wouldn't necessarily negate this inverted because we do have some of these wicks on the left shoulder. So we could drop, 10, 15 points and still sort of be within this this same formation. So 168.76 would be a Fibonacci support on it. That's about it, really. Scale those SPY puts at open if you kept some. I did. I kept about a third. But we got some 300% scales here, so they were way more than free. But we're going to open pretty much close to in the money, so just scale some out and keep a few runners to see if this really falls apart. But we are coming down to this first daily pivot here at 78. Watch that. Watch 74 closely. I think you'll get a few points off of that for sure. And obviously, be aware that once we look at SPX, we got a bunch of these gap fills down here. So that's kind of what we'll be looking at over the coming days. If this continuation downside move keeps going, we'll just be watching to fill those gaps. And that's all I got.
Sounds good.
So
See you guys in the room.
We'll see you in the room. Have a good one.